Hello and welcome. So, is it advisable to invest in the IPO or the initial public offering or the new stock listings happening at this point of time at the current market highs? So, in today's video, I just want to share my thoughts regarding investment into these IPOs and new share offerings or new listings. So, what I want to give you just to start with the background is that if you look at this current market position, which is at an all-time high, be it say USA market, be it Indian market, and whereas that it has no connection with the real economy, what is happening, what is happening in this world. This market is just gone up on its own path in a parabolic path where it is that total disconnect has happened. So is it advisable to invest at this point of when the market is at such a high trajectory to invest into the new IPO or the new shares offered for the listing which comes into the market for listing? So my advice is that it is not at all you should not invest into this new IPOs, because first of all, when it is such a high level of market, when the market is at such a high level, it's that valuations of all this IPOs or all these new offerings are at a stratospheric level, at very high. I mean, that valuation are very expensive valuations. So it doesn't make sense as per se. It's like you are buying something which is say worth of 100 rupees. You are buying it at 1,000 rupees. So it doesn't make any sense, and that too particularly of the new stock offerings or the new IPOs, where that is it's not much tested companies, or you don't have much history to look into to the company's potential or the company's management or the company's actual real worth of that company. So I would suggest that I would first of all suggest to avoid this market at all. There is nothing to do in this market at this point of time, because it is just going on its own trajectory, and when it will collapse or when it will come down, I don't know. I mean, it can be 1 month, 2 months, 3 months, or 6 months, or I really it is all the question of all the liquidity, how it keeps on coming into this market, and it will keep on. The day liquidity will stop coming from outside, that the market will also start correcting. So that is one thing. So that is the advice, is that you should not get into any of these IPOs, whichever how attractive or how that prospective it may look, that this is a new technology company and now all these technology stocks are getting into the headway, and all everything will be the technology driven, so you should get into something like this new technology IPOs, and why not invest money into that, which will in the future it will go 10 times or 50 times or multi-bagger. It will anything, any figures can be discussed, but it will not justify at this particular point of time any investment of money into IPOs is crazy. I would not suggest. That is my, and to support my argument is just look at the market cap to GDP ratio. See, that is a very good ratio to look at this current point of time, because when the market goes up, and then people who are who are not convinced about the market rise at any point of time in history, they always give this argument about the India's, particularly this market going up, was that you look at market cap to GDP ratio, where it is zero point 0.6 or 0.7, means it's not equal to 1. So there is still a huge scope for market to go up, as compared to say USA or the developed market or the other emerging markets. They always give that argument of market cap to GDP ratio. So now at this point of time, you will be surprised. I don't know how many people have seen this market cap to GDP ratio right now. Is that the current market cap of NSE and on National Stock Exchange is $2.27 trillion at current constant price of today's dollar. And what is the GDP? As you must be aware, that GDP in the last quarter had come down by 23%. So nobody is giving you the figure of GDP as per se, but if you calculate back calculation from whatever the last year's constant price GDP was around 9 trillion. Okay, and you if you 23% if you take it down, it will be around 2.3, almost like $670 billion of GDP has been lost in this due to this coronavirus pandemic and all this lockdown. So to come, it is market cap to GDP has reached 1.1. All it has crossed 1. That is that alarming factor. Even so for those very optimistic or the bullish people, this is also a figure to look at, is that it is now no longer justification is there that market cap to GDP is below 1, and there is a scope to go. It's almost crossed 1. And if you look at the price to book value, is also crossed 3. It's all-time highs. I mean, don't look at PE, because there are many people who say that no, don't look at PE, but look at this. This is unsustainable. And this is also just because of one stock is getting all the money from foreign institution investors. That is Reliance. It keeps on getting, and that money keeps on coming, and actually it screws up India's economic progress. Basically, all the money getting into the one company and one stock, how it is going to help the overall Indian economy and so many of these other businesses, because money is getting stuck into one company and one idea, and that is only taking up the market above, and that is also making this currency, Indian rupee, is also as strong against dollar, and it's becoming stronger, and that is also hurting India's competitiveness, export competitiveness. So many of this Indian economic activity is going to hurt just because of this particular money flowing into one particular stock. And now also that is also not justified. So this, looking at this market cap to GDP, and even if the people will say that FY21 is already discounted, so let us start looking at FY22. As everybody knows, FY21 is washed out. So even if you look at FY22 and taking out this thing, that now we have to start from this scratch, in the sense that we are $670 billion down from this, what the GDP was in 2019 or 20. So you are almost starting it from, say, $2.2 trillion worth of GDP, and then to go, even if that 10% is, when you talk from the low base of say $2.23 trillion, that economy can be, next year, yes, it definitely can go up by, say, 5, 6, 7%, whatever it is. I don't know. I have not calculated yet, and nobody knows yet, because still there are so much of uncertainty. But just don't look at that figure of growth or percentage of growth. Look at the absolute figure. And the absolutely, we are $670 billion down. So you are starting from $2.23 trillion of economy, and even if it goes up by, say, 5%, 6%, because 10% is not going to happen. Even in the good times it didn't happen. So even with the low base, it's not going to happen. When all the industries are in trouble and only agriculture is contributing, construction is going to be in trouble for a long time. Finances are going to be in trouble because of this pandemic. So many of the closures will happen, and NPS will shoot up. So you will see that economy is not going to go up, say, more than 5-6% even next year, even on a low base. When we are talking about is that after minus 23% down, we are talking at that on a low base, it is still not going to go up. So from $2.23 trillion, if you take it as a 5 or 6%, it will be another $2.36 or $2.4 trillion. And market cap is already $2.27 trillion. So it will be almost equal to 1. So where is the scope for market to go up? So that is the reason I have come out with this video. And my advice is that don't invest into any of the IPO. Any of this, even though how lucrative it may look, because the valuations are at all-time high, and when the market will correct, this will be the stocks which will correct heavily, and whoever, it is like a musical chair, whoever is holding the stock last, he will be the sufferer. He will be out. Like it's like musical chair. It keeps on passing, but who is the last person holding the stock? He will be the loser. So that's I wanted to tell you in this market. And thanks. And if you have not subscribed, I request you to subscribe my channel. And if you like it, you please put a like. That's it. Ciao from Niraj.